Hello friends, you're watching Johannes. Before we start our review, let's make our disclaimer. This video doesn't contain any type of financial advice, so be sure to do your own research before investing. Today, we've got two big stories rocking the crypto world. One about the biggest exchange out there, and another about a blockchain project that suddenly shut down. Let's jump right in. Our first major headline, the founder of Binance, Changpeng CZ Chao, has been granted a presidential pardon by Donald Trump. Here's what's happened. CZ had pleaded guilty in 2023 to violating the Bank Secrecy Act for failing to maintain proper anti-money laundering procedures at Binance. Binance itself paid a huge settlement, about $4.3 billion, for those regulatory failures. CZ served a 4-month prison sentence. On October 23, 2025, he was officially pardoned by Trump, which opens the door for his potential return into more direct crypto business involvement. So, what does this mean for the crypto market and for Binance? First, the market reaction. Binance's native token BNB jumped on the news, and other tokens tied to the Trump family crypto ventures rose too. Second, regulatory signaling. The pardon is being viewed as a major shift from a hardline war on crypto narrative to one of embracing the sector. But critics are not happy. US lawmakers like Elizabeth Warren and Maxine Waters have slammed the move, calling it a potential example for pay-to-pay for favorism. From a business perspective, if CZ is now fully cleared, Binance may embolden to expand US operations, or at least reinvest in fresh growth efforts, especially under a friendlier regulatory climate. But there are caveats. The reputational damage remains. The compliance framework will still need to be strong, and many will watch how the firm acts next. If you're a Binance user or hold BNB, this is a story worth watching. How the exchange positions itself now could shape the broader crypto landscape, from regulation to institutional participation. Our second headline is about Kadena. The Layer 1 blockchain project announced it will cease business operations immediately, citing unfavorable market conditions. Here are some key facts. The team behind Kadena states that could no longer support active maintenance of the blockchain, yet the network itself will continue to run in decentralized way via independent miners, with a new node binary being released for continuity. The native token KDA crashed, in some reports over 55% or more, with hours on the announcement. Exchanges have already begun delisting or suspending deposits for KDA. So, why does this matter? Well, Kadena was once pitched as a scalable POV smart contract chain, and its abrupt shutdown signals how even prominent projects aren't immune to market stress, funding challenges, and governance issues. Without a core team, the network enters a riskier phase. Communities can carry on, but the absence of active development means upgrades, bug fixes, ecosystem leadership could fade. For token holders, this is a red flag moment. If you've got exposure to KDA, watch carefully for delisting announcements, network changes, governance updates. And for the broader sector, the failure raises questions about sustainability of blockchain projects and the need for resilient funding and governance models. Now, let's take a step back and look at the bigger picture. How is the overall crypto market reacting to all these? Following the Trump CZ news, market sentiment has turned surprisingly bullish, especially across major exchanges. Binance's BNB token rallied nearly 8% in 24 hours, pushing it back above $650, making one of the strongest performances in months. Bitcoin briefly reclaimed the 71,000 mark before stabilizing near 69,800. While Ethereum is holding steadily around 2,530. Altcoins with ties to centralized exchange ecosystems like Cake, TVT, and BNB chain DeFi tokens also saw green candles across the board. However, the optimism isn't universal. Following the Kadena shutdown announcement, smaller proof-of-work projects saw minor sell-offs, and overall altcoin dominance dipped slightly, showing investors are still cautious about underfunded Layer 1. So, what traders are saying? In trading groups and across Telegram, sentiment is split. Optimists see the Trump pardon as a start of a pro-crypto administration, expecting relaxed regulations and more capital inflows. On the other hand, skeptics argue this may just be short-term hype, with lasting volatility once political narratives cool down. Meanwhile, volume on perpetual futures increased by over 20% week over week, showing traders are back into action, chasing both momentum and risk. Something else is shifting. Crypto narratives are returning. We are seeing more chatter around exchange tokens, AI-linked coins, and Trump-era revival tokens. Even meme tokens tied to political figures spiked on X over the last 48 hours. It feels like the market's risk appetite is creeping back, but whether that's sustainable or just post-news euphoria is still up for the debate. And speaking of trading and market sentiment, a lot of that action and speculation is happening in the private and public Telegram groups. One of the channels making waves recently, OX Tommy Trading, a community built around quick, no-fluff insights for active traders. Let's take a closer look. The channel is named 0xT0MMY Trading. According to its description, it has around 14,000 subscribers. They say, crypto with no fluff, signals, analysis, insights, and experience since 2015. Straightforward, clear, to the point. So, what it claims to offer? First, crypto trading signals and analysis. The channel presents itself as a hub for actionable info, not just news commentary. Second, experience since 2015. Suggests the admins or group has been active through multiple crypto cycles, which may lend the credibility. Third, straightforward, no fluff style. The branding emphasizes clarity and directness, which is a plus in the noisy crypto space. Fourth, focus on niche. If you are specifically interested in trading rather than long-term hodling or blockchain development, the channel might be well aligned. Fifth, good subscriber base. More than 14,000 members is a sign of traction. The community size suggests others find value. And lastly, clear identity. The no fluff tagline is strong. For many viewers or subscribers, clarity and fewer gimmicks matter. If you are an active crypto trader looking for a channel that emphasizes direct signals and analysis, OX Tommy Trading appears to be worth checking out. The value will depend heavily on your engagement with it. Use the channel's content as one input in your decision making. Cross-verify key signals with your own research. Of course, be aware of risk management. Even good signals fail sometimes. And if you are more into long-term holds, fundamentals, or blockchain tech rather than trading, you may find the channel more suited to this style. Personally, I saw this channel this week and found really interesting, just like a personal assistant about my crypto economy. Even if you use just for crypto news, this will definitely works. I will leave a link in the description. And that's the end of this video. Be sure to like, subscribe, and leave a comment. And check out for more. See ya.